Today, we're going to show you our profits we made for every $1 million invested in our funds. Before we dive into the challenge, you should know our core belief is that math makes money. It's not just a tagline, it's the foundation of everything we do. We trade with our head and not our heart because emotions don't belong in disciplined trading.
Our approach is simple but powerful. We find repeatable, data-driven strategies, we enhance them with AI, and we validate them through rigorous testing. We backtest extensively to ensure reliability, and we forward test to compare real-world results against projections. This commitment to transparency and accountability is what sets us apart.
Now let's take a look at the setup and the results.
Before we place a single trade each week, we run millions of backtests. Not estimates, not guesses, actual tick-level simulations. Nothing is discretionary, nothing is improvised.
And once Monday morning hits, the robots take over. We execute 60 MEC trades per day and 60 EMA trades per day, 120 total, every day automatically. We don't chase, we don't skip, we don't adjust based on how the market feels. Our back-tested rules are the playbook for the week.
And every closing order rests on the CBOE electronic book. That's really important. That means our exits are in the system the instant the trade opens, guaranteeing consistent, unemotional execution. For this challenge, we will only run 2 trades. The first is the MEIC, or multiple entry iron condor. Most traders put on 1 iron condor a day, maybe 2 if they're aggressive. This exposes them to every minute of intraday volatility. We do the exact opposite. We slice the trading day into 390 micro windows, and we enter the best 60 combination. Each one is independent. Each one is pre-tested. Each one targets a precise premium that we know is statistically favorable because the back tests proved it. By spreading risk across 60 small entries instead of one big one, we eliminate the timing risk, we reduce the probability of losses, and we turn that SPX from a single, unpredictable monster into a controlled series of tiny, repeatable income events.
The second trade is an EMA. When the 20-minute exponential moving average crosses above the 40-minute EMA, we enter a put credit spread. When the 40-minute EMA moves above the 20-minute EMA, we enter a call credit spread. But the real power is that we only enter as confirmed by backtesting. No guessing, pure math, pure timing, pure structure. This is how math makes money.
Sure is.
Every weekend, we spend long hours with AI and we test 28 strategies. Every minute premium from 75 cents to $5, stop loss from 50% to 900%, and wing widths from 5 to 200.
We compare the compound annual growth rate. We compare the max drawdown percent. We compare the MAR percent ratio. We also compare our Sharpe ratios. Plus, we have some internal AI-built ratios and benchmarks as well that become critical to deciding what are the best trades for each particular week.
What you see here are the results for November, and they're looking pretty good.
They're looking great. And remember, there were only 21 trading days in November because it was a holiday, but it was pretty consistent all the way through. Maria, why don't you go through and tell us what we got here?
So we made a total of 2,395 trades in SPX 0DTE during the month, and we made a profit of over $73,000. We sold nearly $600,000 of premium and captured over 12%.
We were using 40 to 70% of our buying power, and we had a 7.3% rate of return, which, if I do my math correctly and can read on the screen, that's 87% APR, which is phenomenal. If you want to trade like a pro, you have to trade with a pro like us. Check out our channel to learn exactly how we trade every single day.
And if any of this was of value to you, please subscribe and smash the like button.
Smash!
Oh.